Hello and welcome to this week's US Stock Market Report. I'm Dale Gillham, Chief Analyst at Wealth Within. This week I'll be discussing cryptocurrencies and then I'll dive into the Dow Jones, S&P 500 and the price of some cryptocurrencies being Bitcoin, Ethereum and Ripple. Before we jump into the report, I'd just like to mention if you have any thoughts on cryptos or investing, please comment below and subscribe to our channel to keep up to date with our new content. So let's get into this week's report. When it comes to cryptocurrencies, people generally sit in one of three categories. The first being they know nothing and don't want to know. The second type are those who are aware of it but do not consider getting involved. The third type are those who have been caught with the bug and are speculating. But what are cryptocurrencies? Are they something we should be taking note of? And should we be attempting to make money from them now and into the future? Before we get into what they are, the category you sit in right now will be determined by your knowledge, your experience and tolerance to risk. The type of people who know nothing about cryptos will generally have a low level of knowledge on investing and a low tolerance to risk. In my experience, the type who are speculating in cryptocurrencies also have a low level of knowledge and experience in investing, however are prepared to take high levels of risk. So what are cryptocurrencies? Well, basically cryptocurrencies are a form of electronic money. So that begs the question, will cryptocurrencies become a primary currency that we use every day around the world? Now, I don't believe that cryptocurrencies will become a main form of currency anytime soon. Although we are definitely heading towards a cashless society with things such as Apple Pay and others. But I don't think we'll be buying our groceries or paying our bills with Bitcoins anytime soon. They are just too unstable for the masses to take them seriously as an everyday currency. This brings us to the question of the current limitations around cryptocurrencies. First and foremost, the lack of regulation is causing major issues to this form of currency becoming mainstream. Cryptocurrencies are largely unregulated around the world, and this results in them being highly volatile. The lack of regulations make them very risky to own because any regulation, whilst welcome, will change the landscape and could cause major issues for all parties in this market. In short, uncertainty guarantees volatility. For currencies to be stable, they need government regulation and safety nets such as regulated currency exchanges. For example, investing in stocks which are valued by a company's overall profitability and asset base and buying them through a regulated exchange gives the market certainty and in turn relative stability. When you speculate in a cryptocurrency, you are realistically putting your trust in someone you don't know and expecting them to honour that currency and hold safe your investment in it. And you're also trusting that someone else you don't know will be willing to pay you more than you did for it. Lastly, you're hoping to be able to convert it to something more tangible that you can properly value, like real cash or assets. According to our regulators, exchange platforms on which you buy and sell digital currencies are not regulated. So if the platform fails or is hacked, you will not be protected and will have no legal recourse. Cryptocurrency failures in the past have lost investors significant amounts of real money. In most countries, cryptocurrencies are not recognised as legal tender and are only regulated to the extent that they fit within the existing laws, such as tax laws. This alone is why I will not touch this area at all. And to date, I don't know any professional investors or traders who do. Now you might be asking if there are any valid reasons for cryptocurrencies. Sadly, at the moment, I don't think they have a lot going for them. There is no valid reason that I can see for trading or investing in them. Just because someone can buy or sell something does not make it viable for others to do so. There are plenty of examples over hundreds of years of people investing into things that turned out to be either scams or financial disasters. That said, the whole idea of cryptocurrencies is that they are decentralized and it gives consumers back power over the banks. And I have to think that is a good idea. Decentralization means lower transaction fees and faster processing times for individuals when making payments. This is nice in theory, however we are not yet at that point where this is possible on a daily basis. Personally, I would much rather have my money in the stock market where I know that I can make money and not have to worry 24 hours a day whether my investments have dropped 20% plus in a matter of minutes. The truth of the matter is that the laws of making money have not changed, and those who do not follow them end up broke, and those who do end up financially secure. So let's get into the charts this week. Okay, on your screen now is a weekly chart of the Dow Jones Industrial Average, and you can see here that last week, or the week of ending the 20th of April, if I just expand that out for you, you can see here quite an interesting week. It opened at 24,483. We had a closing of 24,462, so it's closed lower than it opened. But the interesting thing to me here, while it did open at 24,483, it did have a low of 24,375. So it did trade down a little bit. It traded up before it came back down. So it was bullish earlier in the week, and towards the end of the week it did become more bearish. What's interesting on this is both the open and close are right down the bottom of that bar. So if you can see here, they're right down in that bottom third of the one bar. That says to me indecision. It also says to me that the market's not super bullish at the moment, that it's not sure about the direction. And what I mean by that is it's not sure it will go up. So at this point in time, if we start seeing a down bar this week, then it would augur for the Dow Jones index to go below that low of 23,344 points. So we need to see, for the Dow to be bullish, we need to see 1 to 2 more weeks moving up before we do get a down move. But this current bar, or this last bar from last week, doesn't really give me confidence in it. As I said in my report last week, I am thinking that the Dow hasn't fallen enough. I'm still thinking it should be falling down to that 22,320 level, which is that 38.2% level. So to me, it's starting, if we do start seeing a down bar this coming week and into the next week, then that's highly likely that's where it's heading to. So let's have a quick look at, where is it, the S&P 5, the S&P. Having a look at that, you can see here how it's a little bit slightly different on the S&P. If I expand that up, you'll see the story's a little bit different. Last week's bar had an opening just slightly below it did the previous week. Sorry, this is a monthly chart. I'll go to the weekly chart. Apologize for that. On the weekly chart, no, it's pretty much the same here. So it's opened up, moved right up to the high of 22,717 to close pretty much exactly where it opened. So it's a little bit more bullish sign than what the Dow is. But again, both the opens and close, as you can see, they're firmly down in that bottom third of the bar. So again, the S&P 500 is suggesting the market is a little bit bearish. So let's get into some of these cryptocurrencies I'm going to have a chat about. Okay, the first one I want to chat about is obviously the biggest one, being Bitcoin. And as you can see, the chart I've got on my screen right now is not from my charting package, which is Optima. And the reason why it is I've just never ever decided to put the data for cryptocurrencies in that. I can if I wanted to do, but essentially I don't trade them, and I really don't see the sense in me getting that data for that very reason. So I've just brought this data up from a website. I've got a few different charts here on the 3 different Bitcoins that I've got. But looking at Bitcoin, you can see here, what I know for certain is as a trader, doesn't matter whether it's a speculative area like Bitcoin or whether it's a big solid blue chip companies, you know, the top companies in any market, is human psychology drives the market, not the other way around. And a lot of people think that economy's actually driving this price. It's not. It's human behavior that drives the price. It's humans that lead the market, deciding what they want to do, and then the economic comes behind all of that. If we're not happy with our jobs, if we're stressed about our jobs, then we're not buying things. And if we're not buying things, then companies aren't making as much money, and then it flows through into the markets themselves. So whilst I don't trade in Bitcoins or any cryptocurrencies, and I don't suggest anybody does, they're still going to follow the same general patterns as normal stocks in terms of how human behavior is concerned. When you get masses moving, you get solid statistics on how they're going to move. Obviously with Bitcoin, it had a high right up near 20,000 US dollars here, and it fell right below $7,500 down to where my pointer is now. It did move up. You always get those sort of secondary reactions. We had one through up into here in earlier this year where it moved back up to 17,500. A lot of people were still saying that, hey, Bitcoins are going to go up. It's going to go to $30,000, $40,000. You always get that sort of talk, and you always get a test of a high. Especially on something like this. Markets don't crash at the top, they crash down towards the bottom, and you get your biggest moves towards the bottom. And then we saw this huge move down to the bottom, as I said, below that 7,500 mark. It's now doing what I would call a secondary action. A lot of people think, wow, it's cheap. It was 20,000 or near 20,000, had a big fall, and you do get a lot of people going or saying to you, hey, I bought it because it's cheap. If that's the reason why you've bought into Bitcoin or any cryptocurrencies, then it suggests to me that you have a very low level of knowledge. And I'm not trying to be rude to people. You just don't do that because it could have fallen to 5,000 or 2,500 at that point in time. So it was a high risk effort. So you do get these secondary actions, and now it's fallen away again for its last, or not its last fall, but down to these sorts of areas here. What I'm expecting now is really just that sideways move to continue, because everybody that was ever going to sell Bitcoin that was in it has washed out right now. So unless we get a lot of positive news, it's not going anywhere. And to give you an example is that prior to the end of last year, every day I was chatting to people asking me about Bitcoin, teaching them to trade Bitcoin, blah, blah, blah. Now I'm not getting any. That tells me there's not a lot of participation. So we get a lot of people follow the herd mentality into this area, and herd mentality is not a solid method of investing. Let's get into the next chart now. So on your screen now I've got Ripple, which is the other major one here. Well, there's three major ones that I'm actually talking about. As you can see, Ripple's completely different pricing in that respect, in terms of it hit a high of $3.47 back in January. Again, you can see here it moved down a little bit, and then moved back up again to try and retest that high before falling further down to closer to $1. Then another retest, a further fall, and then another retest back up here, and then a general slowdown. As what happens in this general slowdown is really what I was sort of talking about before, is everybody that was panicking was getting out and realizing that this rebound through up into here, into that sort of $1.20, $1.30 sort of area. They realized it wasn't going to go back up to $3. Those people that was buying because it's cheap, they started to run out, and the people still hadn't sold yet. They were selling into that, and that's where you get the long protracted downward move here. And again, we have had a bit of a move up here. I don't really expect this one to get above this sort of dollar area very much, and if it does get above this, it's unlikely to get above $1.50 at this point in time. I really don't see a lot in it for Ripple. Let's get into the last one now. Okay, on your screen we do have Ethereum here. So again, high in January, and it was at $1,400. It did move down to around about $1,000. Again, a secondary action moving back up to try and test that $1,250 level before another move down to $750, back up again to around $1,000. Another reaction before that general slowdown right again. Now, it's been a little bit more bullish, Ethereum, possibly because it's cheaper than Bitcoin, maybe a bit more expensive in terms of a lot of people's views as opposed to Ripple. But it has moved up a little bit stronger, and this is probably the stronger one of the three that I'm actually seeing in terms of a technical aspect. Now, on these reports, I'm keeping my technical work very, very simple and very, very high level. I'm not putting a lot of stuff on charts. And the reason why I'm doing is I want everybody to understand the market. Now, with things like cryptocurrencies, what I'm finding is especially right into last year, 99.999% of people that are talking to me about Bitcoins or cryptocurrencies, these people aren't really they don't have the knowledge. Now, on a scale of 1 to 10, I've had a lot of people talking to me. They're saying they're trading Bitcoin, and if you determine I'm an expert trader, that's what I do. And so if I'm a 10, people that are trading cryptocurrencies, when I start asking them about their knowledge, what they understand, how they determine their buys and sells, how they're managing their positions, most of them don't even get to 1 on the scale of 1 to 10, and that's pretty much 99.99% of them. The best I've ever found was somebody around about 2 on the scale. So if you're somebody who's trading Bitcoin, please don't get into, or Ethereum or Ripple, please don't get into that space where the illusion of having knowledge is what you're doing. And that's what I'm finding a lot of people are. They're under a false assumption they actually understand what's going on. You really do need, if you're trading speculative markets like this, you really do need to understand what they're doing. Right now, again, I'm seeing all three of these cryptocurrencies. I don't see a lot of upside in them at all. They are very speculative. You do use them and you are moving into them to invest. Please only ever put any money in it that you can afford to completely lose and not lose sleep overnight. So I'll leave these charts with you. So good luck, good trading, and I'll talk to you next week. What are your thoughts? If you've got any questions, please comment below. Go and listen to our Talking Wealth podcast. They're available on SoundCloud and on our website. Now they're jam-packed with valuable information which will help you elevate your trading. Now if you're serious about learning to trade the share market and you'd like more information about our courses, please click the link in the video description below. Thank you very much for watching this video. If you've liked the video, remember to subscribe to keep up to date. I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck and good trading.